So what's happening in the US economy right now is literally sending shockwaves across everybody's financial lives, for the good, for the bad, and I'd like to break down exactly what's going on and how it affects you. So in 1952, while driving up the West Coast on his honeymoon, no other than Warren Buffett decided he would actually fill the trunk of his car with financial statements so that he could read while he was on his honeymoon. Not actually sure how he found time for that, but he wanted to stop by and visit this casino called the Flamingo because some of his friends actually bought a stake in the casino. After he visited, he decided that this was such a good opportunity. He said to himself, I'm gonna be rich, because if people are willing to invest in something like this, well, this is the land of opportunity. About 2 weeks ago, they had their summit and he repeated this. He told the story and repeated this and said, and today, it still is. So we are still living in the land of opportunity. And I want you to keep this in mind, because if there's one takeaway I want you to get from this video is exactly that. This is the land of opportunity, and I want to go through and dissect what has happened, what's going to happen, so you know exactly how to take advantage of that opportunity. Whether you're looking to buy a house, sell a house, get an investment property, whatever it happens to be, this video is for you. If this is the first one of my videos that you're watching, my name's Jay. I am an investor, a FINRA certified educator, and I'm really just a guy looking to share some knowledge and experience. I would like to ask you, these videos take me so long. I mean, it's weeks to write, do the research, obviously film, edit, get them out there. I would appreciate it, as I'm trying to grow on YouTube, if you would consider subscribing if you enjoyed it. Let's get back into it. So the US housing market has been shifting drastically. Nobody really knows which direction it's going. So of course, as I'm filming this video, the Fed comes out and says that our inflation rate is at a 9.1%, which is the highest we've ever seen. I've never seen that in my lifetime, of course. And it's not absolutely insane. It just means that something that was worth $10 last year is actually worth $10.91 today. So just to give you some background, what's been happening in the market has really been brewing for a long time. Since 2019 to 2020, when COVID happened, the war in Russia, there's just so much uncertainty and validity in the market that it kind of caused this. Everybody was in this panic, and it was a frenzy mode. They went straight to the 2008 playbook and started selling properties. Realtors couldn't show any of the properties because, well, lockdown happened, right? We couldn't go out anywhere, and we all remember how terrible that was. But oddly enough, after only a couple of weeks, if not months passed, things really started to take a turn. The Fed was injecting a ridiculous amount of money into the economy. People were able to start selling their homes and adapting so quickly, right, to this virtual showings and virtual listings, that people were buying properties without ever even being there physically, which happens now, but not nearly in the scale that this caused it to happen. And because we were spending so much time at home, we actually started valuing our home a lot more. And because a lot of people transitioned to work from home, they wanted maybe an office, a little more square footage, maybe a pool, maybe you're looking to upgrade a little bit. You want a bigger yard so your kids can play, or you got a dog, and you realize that now that you're spending so much time at home, it probably makes sense to get a better home. And we saw this happening across the entire US, where people living in states where the real estate is so expensive, they decided to move to different states, and states where probably people were living in, but now they got a remote job or 2 jobs and their income went up. They're moving into the states where people were leaving from, right? So the Californias, the Floridas. I'm seeing a lot of traffic into and out of Texas. It's been pretty crazy. I had a property down the street from where I'm recording this video now, and the property was appreciating at 3 to 5% on a monthly basis, which is it's insane, right? If you stop to think about it, if it really appreciated about 5% every month, at the end of 1 year, the property almost double in value. So during the last few months, we saw what people are calling the Great Reshuffling, where people were looking to upgrade their homes, and they're buying, they're selling, they're just kind of going crazy. Like if it's a Black Friday market sale on the real estate market, right? I think 2 things actually made this happen. The first one is that the Feds reduced the rates of getting a mortgage to a point where the money was almost free. So not only did obviously the rich and ultra wealthy take advantage of this, but obviously the people that were looking to buy a home for a really long time, now they could almost get it at the best possible rate. People who already had a home, they got a second, maybe even a third home, because the money was just so cheap to get. If you really think about it, if you get a mortgage that the interest rate is so low and you rent it out, for instance, literally almost any rent payment would cover that mortgage. So people definitely took advantage of this. So because everybody's purchasing power went up, investors easily made a decision that, wait, interest rates right now are so low and I can get money for so cheap. It's almost insane. Why not use up all of my credit lines, get more loans, purchase more real estate? So it literally just continued feeding the frenzy. So now we have first-time homeowners looking to buy real estate, the investors doubling down on real estate, and obviously the lack of inventory. And it created this hockey line curve on the real estate market. So these bidding wars were created and they got pretty insane. I remember reading an article where someone was willing to allow the homeowner to name their firstborn if they sold him the property. And these, we're talking about people giving 50, 100,000 more than asking price. So I actually had a house and I listed it on the market back, I want to say in like November of 21. When I listed it, I only did an open house for one day, and it was, I believe, a Saturday. By Monday, I closed on an offer. I received almost 30 offers, and one of them was literally 10% above the asking price. And the second reason is that a lot of people, because of the uncertainty and the validity and COVID, they didn't want to sell their homes. So this created a market shortage. So we have on one side, the demand skyrocketed, the supply plummeted because a lot of people didn't want to sell their homes. And the other variant was the fact that a lot of new construction and the homes that were being built were just massively delayed because of the strain on supply chains and the world economy that happened because of COVID. And I personally think that this is a massive mistake that the Fed made, because they kept saying that the inflation wasn't going to happen, that it's temporary, that it was a transition phase, and they let the rates go on for way too long while feeding the economy with stimulus, while buying, housing bonds and stabilizing the housing market even more. And now it's finally time for the economy to pay the check that the Fed wrote a couple of months back. So when they finally admitted that inflation was getting bad, they decided that they were going to stop with the quantitative easing or mortgage bond purchasing, and it really didn't do anything, right? They mentioned that they were going to increase interest rates, really didn't do anything because there was so much demand in the market. Realistically, the rates went from ridiculously low to just, average. It didn't actually create any negative effects in the market or any slowdown in the market. While at the same time, stocks were trading at an all-time high, crypto was trading at an all-time high, so people felt secure enough to still take on the small increases that they were doing on the interest side. While all of this was happening, inflation started creeping up and becoming a problem. So money's been injected into the economy that, inflation rises, right? Because there's a lot less value of the dollar with so much being printed. So what they've decided to do is then let inflation actually go up and consumers essentially calm down with all of the spending, all of the bids, all of the buying. I'm still getting emails from my realtor, and for the first time, I'm starting to see some of the emails that have like a price decrease because that house has been on the market for more than 20 days. And that in our current market, that's like crazy, right? Trying to sell a property for more than 20 days when traditionally it takes 30, 60, 90 days to actually sell a property. So all this chaos is bleeding into the stock market. We're having a pretty bad year where stocks are down almost 30%. There are certain stocks that are down way beyond that. And we're seeing a bit of bubbles in one places and others. Trading activity has been plummeting and people just don't feel as confident putting their money into the stock market. So they're doing a massive pullback. And this goes on to cryptocurrencies, equity markets, pretty much everywhere. While when in a recession, people want to hoard more cash. And this fall is a lot more intense than just a normal traditional market correction, right? The biggest difference between the crypto market and the stock market is the stock market has actually been through multiple recessions, down cycles. Whereas crypto, there is no playbook that we can just go to, look at the data, see what happened. Whereas, the stock market, real estate market, and pretty much every other market, we do have that. One of the plays in the Federal Reserve's playbook is to actually allow for a recession. They did this back in the 80s when inflation was out of control, and it allowed the real estate market to cool down, some of the other numbers and metrics to stabilize, and it greatly helped the US economy. And this would be something that makes sense. The problem is, on paper, it looks great, but in real life, we see very drastic plummeting numbers like we have in the stock market. The other thing to keep in mind is, like back in 2008, you had a lot of single families that held these single family properties, whereas now there are a lot of companies, institutional investors that are also owning not only commercial properties, but single family homes as well. So we have no idea how they're going to react to a recession. Are they going to sell it? Are they going to hold it? Like, we just don't know. So there's a lot of unique variables coming in this recession versus what we saw in previous recessions. So the loans that we're seeing today don't even come close to what happened in 2008, right? Those were bad loans, people with bad credit, and the bank was just pretty much giving anything away. Today, we're seeing people with the highest credit scores, incomes are a lot better, and people are being qualified much more rigorously than they were back in 2008. So I really don't think the market is going to crash like it did in 2008. The Fed is going to continue increasing the rates. It's going to cause a slowdown. People who could barely afford the house with the increase of the mortgage rates, they will not be able to anymore. Like I mentioned, it happened with me. I had the option of taking this loan and it was just too high of a debt to income ratio, so I just decided to back out. But it's happening across the country, and this is going to cause, obviously, the demand to slow down, and this is going to begin kind of settling down inflation. Even if they still have the money to qualify, because they likely took a hit with stocks, with crypto, they're seeing the cost of everything go up from gas to cheese and eggs. It makes them less adventurous about taking on this level of risk, because if you lost some, you're kind of going to take experience from your losses, and especially if it's your first time owning a home. So as some people realize that market is slowing down, I think a lot of people are just going to end up staying in their homes and not actually selling it. Obviously, if they do sell it at not as an aggressive price, then the next person who sells it kind of has to use that home that was sold as one of the comparables, and the market begins to cool off. It's important that the government allow this inflation to happen so that everything kind of goes down and stabilizes. Now, with all being said, remember what I mentioned about Warren Buffett in the beginning of the video. It is still the land of opportunity. So if you find a deal that the numbers work, you should still get it. I think in any economy, whether it's good, whether it's bad, inflation, no inflation, as an investor, you need to know what your numbers are. Does the property cash flow? Is it in a market that's going to appreciate over time? If you can find, the items that all of them line up, then by all means, make the purchase. There's no need for you to be afraid or fearful of that. If the property is going to cash flow positive and pay the mortgage, go for it. I'm continuously analyzing deal. I probably analyze several on a weekly basis, and I make offers on a weekly basis. Most of them are denied because I have to make sure that the numbers work for me. And one or two are, accepted, and then down the line, they fall through the cracks. It happens. You can still find opportunities. You just have to look for it. A couple of companies that I'm doing this with, one of them is called Doorvest. It is phenomenal. You put in all of your criteria, and maybe once or twice a week, they will literally send you off-market homes of companies that want to sell. My issue with Doorvest is that there's not a lot of cash flow. I've been looking at a lot of other alternative investing into real estate. One of the companies I really like right now is called Lofty. Lofty allows you to invest in these securitized tokens of a home, and you can essentially buy just one share of that home for $50. And depending on how many shares that house has, you are a percentage owner of that property. You get all of the cash flow benefits, tax depreciation, and obviously home ownership, except you're kind of sharing the ownership with a bunch of other people. It's a pretty nifty platform. They're not sponsoring this video. I just want to make sure that you check it out. If you're not subscribed to the channel, considering subscribing and following me on Instagram. We're pretty close to 400,000 followers. Thanks, guys. Have a good day.